Um, I usually start off with my band, but I'm not going to do that this time. It's a much more serious uh, event today. So let me let a few more people get on because I think we had 54, 55 that were signed up at least, and then there's like 30 on. So give it a few minutes if you don't mind. I voted, by the way, so I did my work, and I will let you know that I voted both Democrat and Republican in my life. Um, and a lot of people stick to their party, but I always vote for the policy, not the person. And I learned that, for instance, Bill Clinton was probably a sketchy, morally sketchy man, but he was a good president. And then I will respectfully submit that George W. Bush was a really good moral man, but I would argue he was not a good president in any way. Well, he did cut tax rates, but I mean, the ethanol mandate, endless wars. His father was the same way. Fine man, Navy officer shot down. Fine moral man, not a good president. One termer. Remember, he said, "Read my lips, no new taxes." Then he raised taxes. As Art Laver said, you couldn't read his lips, for his nose was growing from the lie. So my point is, I always vote for the policy, not the person. And morality is not a requirement for good for a person to be a good president. John F. Kennedy is another one. He would not fit in the Democrat Party currently. The current Democrat Party, he cut tax rates. He was a war hawk. He too was, cheated on his wife and famously. So not exactly a moral paragon. So once again, I vote for policy, not the person, and neither party has a monopoly on bad ideas, and that is a fact. So with that in mind, we're going to go through a little bit about the election, the polls, and what they're telling us or not, the policies differentials a bit, and then what the investor ramifications are in prices. So I'm going to run through all that and then tell you what I'm deathly scared of at the end, and then we'll have questions if that's okay. So thanks again for joining me. And I'd like to thank the men of Trustco and N3L, my hedge fund, which are Fairfax Land Street Jr., George Smith, Garrett Moran, our team. So we are managing assets for families and individuals and foundations, and we love our job. It's getting, I can sense that it's getting a little harder these days. So it's not just going to be up every day. Obviously, VIX or volatility has increased substantially, and we think that's going to certainly happen through next week. And depending on who wins the election, we could see some serious social unrest, as you already, I'm sure, have contemplated. So I'm going to have a little fun at the outset, which I always like to do. On COVID. Let's see here. Give me a second, please. I went to get my COVID test recently because we had a gig in Rhode Island, and I was shocked to find that, well, you can just see it. It's self-explanatory. Actually, it was in the nose, my copious nose. Yikes. And it was easy though. And then this is something that I saw somewhere, and I thought this was very, very funny. So we're trying to have some fun in a dark era of COVID. So that's that. We'll move on now. The polls. So the narrative is that Joe Biden is well ahead, and he's going to literally stomp Donald Trump. And of course, that was the narrative in 2016 as well. Many people think the polls have improved. We don't see it. We've looked at so many of the major polls, the big headline grabbing polls, to determine that in almost every case, they are polling more Democrats than Republicans. I don't know the reason for that, but it's substantial. In this case, it was the NBC Wall Street Journal poll. The headline blurted that Trump, Biden's lead jumps to 14 points. But if you look at the details, which you can find on almost every single poll, it takes about 30 minutes. It's painful, but you can find the cohorts. That is the people that are surveyed. and their party affiliation, age group, and so forth. You can find those details. And in this case, they polled, 9% more Democrats than Republicans. So this is exactly what was going on in 2016. And as we approached the election day, then the polls were narrowing, and they probably narrowed within about a 5% range. And that was when I started telling my wife that Trump might win, because the margin of error on these polls is anywhere from 2.5% to 3%, right? So, anyway, so here's another one. This is the Economist YouGov poll. Once again, it has Biden up 9, but they polled 6.67% more Democrats. So once again, this is a tight race. It's absolutely too close to call. Everyone's asking me who wins. I cannot tell you who wins, but it's a lot closer than the polls suggest, which is just fascinating. And I won't make any other comments or judgments about this. What matters really is the Republicans are going to go with the status quo of what they did in the 2016. In fact, if you go look for the Republican policy platform, you'll find it's stamped 2016. So they really have not even upgraded or modernized their 2016 platform, which included tax cuts, deregulation, and energy development and so forth. So nothing's really changed on the Republican side. If anything, well, they're calling for personal income tax cuts, which is interesting, but I haven't really seen the details of that. That's and energy independence and the same things. They will have the same policy of protectionism, by the way, the America First policy, which I'm kind of lukewarm on the tariffs, honestly, and the America First sort of protectionism. I think that can get out of hand, and it has certainly in the ages past. As for the Democrats, wow, they are ambitious. If you go look at their policy platform, it's 75 pages. I read the whole thing, and I'll tell you, it's part Lyndon Johnson, Great Society, and part Juan Perón, the famous president of Argentina that took office in the early 1950s. So this is just kind of another poll that I thought was interesting. U.S. voters are increasingly pessimistic about an economic recovery, and it shows the voters overall, Democrats and Republicans. And I think that's because we're not going to have the V-shaped recovery that everyone spoke about. It happened in the capital markets, the stock market. And we are seeing some very strong economic numbers, but they're month over month. If you look at the ISM, which they famously popularized on CNBC, they're month over month. So of course we're up 35% month over month. Okay, we're coming out of the depths of hell. It really matters is how are we year over year, and we're still probably 10% below last year, and we're going to remain there for the rest of the year. And I really don't even see a fourth quarter bounce, especially if the Democrats get elected. And I'll go through that. Again, neither party has a monopoly on bad ideas. And what I say today will sound partisan, but it's not partisan. It is political, but it's not partisan. I have voted for Democrats and Republicans, and I vote for the policy, not the person, but I am skewed towards free market democratic capitalism. I think that the private sector does a much better job of allocating resources than the public sector, and I can prove it over time. That's that. Now, I read the party platform once again, and I will tell you that the Democratic Party platform starts off with this very interesting and aggressive commentary. We will never accept political gridlock as our fate, and we will end the war on government. See, they see Donald Trump as a spoiler. Government has been growing substantially, as you know, over years, and through thick and thin, and through Republicans and Democrats, including George W. Bush, who grew our government substantially, regulatory wise and otherwise, and our debt and deficits. What's fascinating to me about this is I categorize our current president, Donald Trump, as a virus in Washington, okay? And what is interesting is the viral response. You may know about COVID that what really hurts a patient who's got COVID is not the virus itself. It's the body's viral response. It's the extreme response that attacks the virus. It goes overboard and it ends up, for instance, going into the lungs and creating what they call a cytokine storm. And that's the issue. It's not the virus as much as it is the viral response that hurts the patient. By the way, this is the case in HIV. It's the case in other SARS viruses, and it's the case in many cancers, that it's the viral response that hurts the patient. And so what's interesting here is that I believe it's a perfect metaphor for Donald Trump. He's the virus in Washington, and he is spoiling it for all the apparatchiks, all the technocrats, all the bureaucrats, all the politicians, the hundreds of thousands, if not millions of employees that were having a grand old time prior to this prick arriving and spoiling it. He is a virus, and their viral response is tremendous. And so when people tell me I hate Donald Trump, and they tell me how ugly he is and how disruptive and chaotic, I really have gone into, I've thought about this a lot, and I think, yeah, he's a prickly guy and I don't particularly like him and I wouldn't even want to have dinner with him. And I was a very reluctant supporter, but his policies are good. But about him, yeah, I get that. But what's interesting is that I don't know if it's Trump that creates the chaos, meaning the virus, or if it's the viral response to him that creates the feeling of chaos, meaning the press, the mainstream press, and politicians throughout the country that have responded to him in such a violent way. I can't quite get clarity on that, and I hope that's a clear description of my thoughts about it. And then that aggressive commentary from the Democrats about never accepting political gridlock, that means they're going to try to, for instance, in their platform, they call for making DC a state, Puerto Rico a state. And you hear them a lot of talk about stacking the Supreme Court. Here's the deal. They're not looking for deliberative government. They're looking to win and win big. And not only that, take over for good. They'll end the war on government. That to me is scary as hell, by the way. I'm a little bit of a libertarian. I think government is terribly frightening. And this commentary scares me to death. It's very banana republic. And then it reminds me of Ronald Reagan's famous words. The scariest words in the English language are I'm from the government and I'm here to help you. He famously said that, and I think he's right. So there's the contrast. Just about the Republican status quo, the Tax Cut and Jobs Act. What did it really do? And I've been over this before, but if you look here, the lowest 25% of wage earners experienced the largest wage gains among all the cohorts of wage earners, over 4%. And in fact, the most in over 30 years. This is data. This is fact. This isn't partisan. This happened. And this happened because tax paying entities, meaning companies, got a big break in tax rates, which increased their profitability, which led them to go out and hire and compete for wage earners and for workers. And actually it ended up showing up in an increase in wages for the lowest quartile of wage earner. This is fact, folks. And again, you can look it up. The biggest wage gains among the lowest quartile in over 30 years. So that's substantial. This is the status quo. Wages growing faster for the low-wage workers at the moment. The blue line is low wage, red line mid-wage, and then the thin gray line high wage. This is pre-COVID, and the prior one is pre-COVID too, by the way. That one's pre-COVID. COVID ruined everything for everybody. This is the status quo. So if we have no change and tax rates do not go up, and then if we can get over this COVID crisis, I think that wage gains will resume for the lower wage earners, for what it's worth. Donald Trump's been a huge deregulator. I love this part of it. I mean, I just don't like Big Brother. I don't like him breathing down my back. We're a small business and we're somewhat, we haven't planed out, if you will. We're still growing and we're still spending our own money to grow. Deregulation is disinflationary. It lowers the costs of goods and services across the board. And under Donald Trump, you saw fewer costly regulations, significantly fewer than Obama, and also half of what George W. Bush enacted. So again, here you have two Democrats that are much more, we called Obama's actions a regulatory jihad. He regulated everything that moved, wiggled, and crawled. Federal deregulation has saved at least $23 billion from the productive economy. And that was, again, prior to COVID. And this shows where the agencies and departments that showed the most deregulatory action, starting with Health and Human Services, going down to the VA. That's the status quo. That will continue under the current president. And then tariffs. I told you that I'm a little bit nervous about tariffs and protectionism. They worry me greatly because the Smoot-Hawley tariff set us, was widely criticized for triggering the Great Depression. So they have a history of having an ugly outcome. And tariffs threatened nearly 40% of the gains from the Tax Cut and Jobs Act, which cut, of course, cost of doing business. And then here the tariffs reduce some of the accretion from the tax cuts, if you will. So both parties are calling for more protectionism, by the way. I don't see a difference there. And then what's fabulously interesting is that when the stimulus checks went out, $2.2 trillion of stimulus checks went out, as you know, in March and April. It went straight to China. So despite this, which is tariffs, and especially on Chinese goods and services, our stimulus checks went to China. We spent money, and we did it through Amazon and at Home Depot, as you know, Tractor Supply, great companies, all of them. But a lot of their stuff comes from China. So that's very ironic to me. I just thought I would share that. It doesn't have investor ramification. Well, maybe it does. The trade war didn't intervene at all, and we are still importing goods from China because of the cheapest and best made products in the world right now. Okay, China's optimized for cheap production, and they're optimized for a logistics system that can deliver those cheap goods to the market so quickly and so well. And any change to that, by the way, is going to be slightly inflationary. I've read or I've heard from trade sources in Washington that there, as a result of the trade war with China, 25% of Chinese production from U.S. companies could move to the U.S. or Mexico or other places, and that increases prices, folks. So this is a summary of Joe Biden's tax proposal estimates, and he's going to repeal the Tax Cut and Jobs Act components for high-income filers, but corporate tax rates are going up. He's going to impose a 12.5% Social Security payroll tax for wages over $400,000. And by the way, these aren't guys at like General Mills and General Electric. The people that earn that kind of money own their own businesses, by the way, a majority of them. In fact, they're entrepreneurs. That's where all the wealth is in America. It's in the entrepreneur class. It's those people that own their own businesses. And by the way, a little surprise here, capitalists do not work to pay taxes. In fact, they work very hard not to pay taxes. We know because our clients are scrambling currently to hide their assets in trusts currently. Right now, fearing a Biden victory. They are not going to pay those higher tax rates. They never do. A little factoid we discovered when I worked for the great Arthur Laffer was that the rich, the top 1%, 2%, 3% of wage earners, which are, again, mostly entrepreneurs, they pay about the same amount of GDP in taxes, no matter what the tax rate is. From, for instance, Ronald Reagan's 28% tax rate all the way up to 71%, which was the tax rate before he took office. Before John Kennedy took office, 71% highest marginal tax rates. And Reagan cut them to 28%. And the rich paid about the same amount in taxes throughout. What does that mean? Well, they can employ more accountants and lawyers, and by the way, senators and congressmen, to shield their taxes. And they can do so, to a much greater extent than the average wage earner. So when you raise taxes on the rich, they don't pay them. It's always a disappointment. But it will divert creative effort from productive outcomes. And it will divert that creative effort to evading and avoiding taxes rather than growing and developing businesses and hiring. It will absolutely be a disincentive to work. It'll be a disincentive to hiring, and I'll go through that in a minute. This is just a quick rundown. So he's going to raise taxes on labor income, investment income, and business income for those earning $400,000. It's going to repeal the Tax Cut and Jobs Act tax cuts. It's going to increase the corporate tax rate to 28% back where it was. He's going to propose new tax credits and expansions on existing tax credits for lower wage earners. And he's going to, push for onshoring, where he's going to give tax benefits to U.S. and manufacturers. He's going to penalize those U.S. companies that generate their income from overseas. And by the way, remember Donald Trump allowed companies that had huge overseas tax revenues or hordes of cash that they had accumulated overseas to repatriate those dollars at a low tax rate. And a lot of that money came back to the US. Apple, for instance, was legendary for having trillions of dollars in European accounts. They've repatriated that. Biden's going to reverse that to where we'll be taxing those foreign profits again. And again, what it'll just mean is they'll just hoard that money overseas. Remember that they don't pay taxes. Even the most Democrat-leaning CEO has a huge tax department that's there for one reason, and it's to save taxes. So anyway, that you probably read that in the meantime. The bottom one's very interesting. It raised about $2.78 trillion after accounting for the reduction in the size of the economy. Wait, a reduction in the size of the economy. The bullet point above it says it would shrink the long-run size of the economy by about 1.62% due to the higher marginal tax rates on labor and capital, which again reduce the productive capacity of the economy, reducing output and reducing wealth creation, lowering GDP. So when you adjust for that, it generates 2.78 trillion. By the way, slightly more than the stimulus checks generate. It was $2.2 trillion in stimulus checks that were sent out. Now they're debating another $2 trillion program. So these tax increases are going to basically, increase revenues to the federal treasury by about the same amount. It's really, it's not consequential, but it is consequential to behavior. They're going to re-regulate the entire economy. Remember, I referred to Barack Obama, who, by the way, I thought was a fabulously attractive president. I liked him. I liked him a lot more than I like President Trump as a person. And I would like to have dinner with him, by the way. But I will tell you that he was very anti-growth. That's obvious. And mostly because, his experience was different. I mean, he wasn't a businessman. That's true. He's a community organizer. It's where he comes from. He didn't understand that regulating production lowers production, that a regulation is nothing more than a tax on production. And we jokingly referred to his regulatory efforts again as the regulatory jihad. But here we are. The regulatory proposals from the Democrats right from their platform is Medicaid for all, which I say Medicaid, they call it Medicare. Remember, Medicare is a paid-in program. You pay Medicare taxes. What they're proposing is not a paid-in program. Nobody pays into it. The government pays 100% of it. So that's Medicaid, folks. That's not Medicare. It's not a paid-in program. They support telemedicine. It's a great idea. Already, growing like crazy, and as it should. And then National Healthcare Surveillance Program with 100,000 tracers. Whoa, I thought that was edgy. Can you imagine 100,000 people dispatched across our great country to snitch on us when we don't comply with healthcare standards? Okay, on the surface, if we were all honest, maybe that wouldn't be bad. But the truth is, it's government. It will be bad. It's Big Brother. The fourth bullet, they call for a big increase in labor regulations, a $15 minimum wage, national minimum wage, which, by the way, sounds great on the surface, but all it does is increase the cost of employing people, for small businesses. So they just won't do it. And by the way, who earns 15? Who earns 12? Who earns $10 an hour? It's those people that don't have a college education like my audience generally does. It's those people that don't even have the requisite skills to earn $15 an hour. Maybe they didn't graduate from high school, or maybe they had subpar grades in high school, or went to a terrible public school, failing public school, and they just don't have the skills set to earn that kind of money. What a $15 minimum wage does is it prices them out of the market. So those people, generally underprivileged people, never get that first job. That first job, by the way, which gives them in the end those requisite skills to get that promotion and to move up the ladder and to earn more money and to get the great feelings you get from accomplishment in the real world. It literally takes the first two rungs of the ladder off of the ladder so that those who need it the most, those underprivileged people out there that need that job, can't get it. So there is a very ugly side effect to a high minimum wage. And that's how it works economically. So, if we get it, I feel terrible for that cohort of the population. Then they're going to outlaw right to work status for states. So what has benefited this South so much is our right to work status. What that means is if you're a union, if you work for a union shop, you are not obligated to join the union and pay dues. Okay, you really don't have to pay dues if you don't want to join the union. Is that shocking? Is that a wild freedom? Well, it is in Michigan. It's not a right to work state. Or did it switch? I think Michigan might have switched to right to work. But in California, it certainly isn't. Well, they're going to get rid of that. So whatever advantage the Southeast had is going to be gone. And this is a very, very pro-union platform, by the way, that the Democrats have developed. Very pro-union. And within 5 years, we're going to install magically 500 million solar panels, including 8 million solar roofs, and community solar energy systems, community, near the community center, I trust, and including 8 million solar roofs. And 60,000 wind turbines. So they're going to magically transform our economy into a zero carbon emission economy by windmills and solar panels. By the way, did you read 2 days ago, the Bay Area in San Francisco had another blackout? Their cell towers didn't even work. Businesses had to shut down. People didn't have power. The refrigeration stopped. The other day in Cosmopolitan, California. Well, that's because they mandated that a certain percentage of their power is generated by renewables, which currently mean solar and wind. And it's very expensive to store power from solar. In fact, if the wind doesn't blow, you don't get any wind power. So they've left the grid vulnerable. They've left their populations vulnerable. And they're having brownouts in sophisticated, modern, and wealthy California. That's coming across the United States. It is coming if they don't adopt, for instance, natural gas as a power supply. But also, I even think nuclear, which, by the way, a number of prominent environmentalists are now embracing nuclear because there's no way to achieve zero emissions without nuclear. FYI. And they're going to lead the world in the effort to keep global warming to 1.5 degrees Celsius. I love the way they think they can fine tune the weather and the temperature globally to 1.5 degrees Celsius. I'm surprised they stopped at that decimal. I'm surprised they didn't go out a few more, 1.57348 degrees Celsius. That is, I'm just going to let that land. To me, that's crazy that they could think they can fine tune that. It's their need to micromanage everything. Oh, and housing's not a right. Is a right, not a privilege. That rent control is in the platform. Okay, so broad-based U.S. rent control. We know how that works in New York. When I lived in New York and had to pay a fortune for my apartment, I read that there were 80,000 apartments that were so-called warehoused, meaning not on the market because of rent control. Landlords couldn't afford to put them on the market. They couldn't maintain them and meet codes. So they sat off the market. So 80,000 empty apartments sat there while I fought with other young people to pay a fortune for the remaining apartments. So it creates scarcity. Okay, and it raises prices. Rent control does. Is that surprising? Look at California's housing crisis and homeless crisis. They have such regulations on building codes, regulatory codes, environmental codes, that there hadn't been a large housing development in 15 years. And this one company called 5 Point Holdings has a 10,000 acre development that they've just started selling homes to. It's the first in 15 years. It took them 15 years to litigate that. So that leads to scarcity. And then they're going to outlaw school voucher and scholarship programs, which of course is a tip of the hat to the teachers unions. But I believe in competition at my heart. I've had personal experience with school voucher programs and scholarship programs. They should be the civil rights issue of our day. They will basically create competition for those lower wage earners, how do I describe those people that need education the most and don't have the wherewithal to go to a fine private school and escape the slums and escape the failing public schools. This gives them a ticket out. And so anyway, they're going to get rid of those, which of course is completely anti-progressive, but it is what it is. All right, back to small businesses. So this is the mother's milk of our economy. It's where all wealth is created. It's where the majority of job creation comes from. And this is not even taken into consideration excuse me, with some water here. Enjoy a sip of water yourself. Yum. Um, this is the percentage change in the number of small businesses after COVID. So we're going to have a 19% decrease in retail and transportation, 24% decrease overall, and then almost a 37% decrease in leisure and hospitality. And that's going into the back half of the year. That's terribly devastating for America's job creators. And this is just a kind of a chart of what's going on in the economy, and I'm going to get into that here in a minute. The contribution to quarter over quarter annualized growth. You can see when I mentioned the ISM, which is the industrial. The ISM is I forgot the name, what ISM stands for, darn it. But it's the gauge of industrial production. When they say it's up 30 something percent, as you can see here, that blue line, that's quarter over quarter. And then they're expecting the next quarter to come back to about a 6% or below rate. And my guess is, folks, that next year we won't hit 2019 levels for several years. That's my prediction. And if we get the regulatory jihad back and higher tax rates, it's going to be 2024 at least until we hit till we get 2019 growth rates back. This is what's going on in the earnings area. So the market's changed, the stock market. Up until recently, when a company beat earnings numbers, the stocks rallied like 7, 8, 9, sometimes 20, 30, 40% in our faces. I mean, we're in our faces in the market all day long, fretting the details. It was extraordinary. That stopped. So now when companies are beating numbers, and they are because expectations got too low, stocks aren't moving up. The median rally on earnings beats, as you can see in Q3 2020, is hardly visible there. So the structure of the market's changed. And then when the sell-off on earnings misses is terrible, down, you can see they're 5.5%. You saw SAP, the giant German software company, missed numbers the other day. The stock was down 20%. That's new. Okay, that's a totally different market than we've had all year long. Well, since COVID. And really all year. I would say all year. So something about our equity markets has changed. They are no longer rewarding earnings outperformance, and they're severely punishing underperformance. So this is, and I happen to think this is the way it's going to be for the rest of the year. So beware, and I would be cautious as an investor, not just in front of the election, but throughout the year and even into next year. I'm kind of bearish. This is just to give you, I've been over this with you all before. This is S&P milestones. This is the S&P, the purple line. And these are the various programs that have been enacted by the Federal Reserve. Every time the stock market falls, they enact some sort of program to bail out the market and the economy. Here, ZIRP, zero interest rate policies, Operation Twist under Janet Yellen, QE, which happened, as I've said before, when we weren't even in a recession, they started quantitative easing. That's where the Fed was injecting trillions of dollars into the economy by buying treasury bonds off bank balance sheets, okay, big banks, and injecting money into the system, hoping that it would create inflation and growth, and it didn't. Throughout that period, we had a modest 1.8% GDP growth, subpar. It was the weakest response to a recession in history, in record-keeping history. And then we have Janet Yellen paused here when she had said that we're going to raise interest rates, and then the market collapsed and she reversed completely and decided not to raise rates. And then you get Trump elected, which is meaningless really here. Then this fall right here, the next one where it says rate increase on autopilot, that's when Jerome Powell, who came into office as a hawk, the new Fed chairman, he was a hawk. He was intent on raising rates and normalizing rates. And he said rate increases are on autopilot. And he did his dot plots, which sent a message to us market participants, that we're going to see a rate increase of a quarter point per quarter for whatever until rates are normalized. Well, the market collapsed, and he did that famous Powell pivot, where, by the way, he made an announcement in like early 2018, early 2019. He had Janet Yellen on one side and Ben Bernanke on the other, probably to provide support in case he fainted, when he came out and he said, well, forget it. The rate increases are not on autopilot. I'm going to actually freeze rate increases. And then he ended up cutting rates later. So again, the market is addicted to the Fed and rate increases and money printing. And every time they pull back, the market collapses. And then they like children in a scary movie, reverse course, and then throw trillions of dollars at the market, at the economy, bailing out the wealthy at the expense of the poor, and income inequality expands. And then certain people, progressives, come out with a wrong plan to alleviate that. It's craziness here. But this is just, I want to prove to you here that this market and this economy is addicted to money printing, and it's going to get worse from here no matter who's elected. And I'm going to go, by the way, the Fed balance sheet is no longer expanding, and the market's pulled back some, and I think it's related, okay? We're going to go through some of this. MMT. Okay, so I just mentioned that under a Republican or Trump presidency or a Biden presidency, you will see money printing. You will see a Federal Reserve that is willing to bail out the economy at all costs, that is willing to support financial assets, no matter who's elected, okay? And by the way, debt and deficits are going to continue. Remember, coming into COVID, 60% of NASDAQ companies, those are the companies, the constituents of the NASDAQ, the companies that make up the NASDAQ index, 60% of them had junk bond rated debt coming into COVID. Many more of them have junk bond rated debt now. There's been a record amount of debt issued since COVID. This year, $1.9 trillion of new debt issued by the private sector, corporations, much of it triple B, which is one notch above junk. And of course, our federal government budget deficit is now projected to be $3.1 trillion in the fiscal year 2020. Okay, well over double the prior record, which was 2009. So with debt, corporate debt, I just went over, and government debt, and then deficits, $3.1 trillion budget deficit at the federal level, and then money printing, either candidate, you're going to see more money printing. Okay, you're going to see more Fed largesse. But if Biden gets elected, what really freaks me out, beyond the $15 minimum wage, beyond 100,000 hired people going around trying to call us out for breaking whatever social restrictions on health that we break. This one scares me the absolute most. MMT, modern monetary theory. And there's this woman by the name of Stephanie Kelton. She was an advisor, by the way, ironically, to Bernie Sanders. Stephanie Kelton is the doyenne of MMT, and this is one wild notion. It's the idea that we can just print money and pay for things from federal government spending by just printing money. We can bypass the cumbersome limitations of the Treasury market. Currently, when the government spends money that it doesn't have, it does so by selling a Treasury bond and then taking that money in and spending it. And that's deficit spending financed by issuing securities. Okay, you with me? Treasury securities, okay? She's saying, and the MMT advocates, scholarly community of MMT advocates is saying, forget that. That's a restriction. It's a cumbersome diversion and it's unnecessary. We can just print money and spend it directly. We can print money and send every American $1,200 right now with no consequences. Why stop there? How about 2,000? How about 3,000? How about 5,000? How about 20,000? We can do it. That's what they're arguing. Oh, by the way, and if we need infrastructure, roads and bridges and so forth, and high-speed rail, we can print money and just give it to the contractors, okay? Bypassing the cumbersome and quaint, antiquated, if you will, system of Treasury debt and Treasury spending. This right here scares the living daylights out of this guy. So MMT's main tenets are that government that issues its own fiat money, that's us, we have a reserve currency, as you know, can pay for goods and services and financial assets without a need to collect the money in the form of taxes or debt issued in advance of such purchases. Are you with me there? Taxes even become unnecessary. Under MMT, taxes are only necessary to equalize the playing field, okay? To place a cap on wealthy people's earnings just for social justice, but they're not necessary to fund spending. You with me? It's a radical departure. And item two, The government cannot be forced to default or on debt denominated in its own currency. They just print it, so they'd never default. Isn't that awesome? And it's only limited in its money creation by inflation. I'll go through that in a minute. And it can control demand pull inflation by taxation, okay, and pulling money out of circulation. And they say it doesn't compete against the private sector, which I'll go through these. So here's a little cartoon I found about it. That's what happened with our stimulus program. They sent out $2.2 trillion, and great companies like Home Depot and Tractor Supply and Costco and Amazon benefited from it. And we took to the road. We bought used cars like we've never purchased used cars before. And also the sale of Winnebagos and mobile homes is at an all-time record currently, okay? And housing prices are projected to be up about 25%. So there you go, there's your money printing, and it drove up demand and prices. This is fascinating because this came from an advocate of MMT, and this is nonfiction economics, you get it? Whatever that means. But it shows that mainstream economics are this king with his walking with his minions covering him with a umbrella, and then MMT is for the poor peasant sitting to the side here watching the parade of the king ostensibly, or the prince. So MMT is for that person, okay, which is just printing money and giving it to people for something other than work effort, which, by the way, I would argue creates a friction to the economy. When you pay somebody not to work, don't be surprised if they choose not to work, okay? And if you penalize someone for working, don't be surprised if they don't work. So I just found this kind of gothic looking cartoon just completely shocking. So here's a performance of the German stock market during the Weimar Republic hyperinflation. And yes, I am saying it. MMT will lead to hyperinflation. There's no question about it. If you give a bureaucrat and you give a politician keys to the money printer where there are no consequences to their largesse, they're going to spend more money than you've ever seen, ever. And there have only been a few governments that have attempted this, and they're the most famous in all of history. They are the Weimar Republic in Germany, which you are well aware of between World War I and II. They are Juan Perón's Argentina. They are Chávez's Venezuela. They are, what's the African nation that was so famous for their wild inflation? And when I say wild inflation, like 1,000% a week. Zimbabwe. So, by the way, under this, and I am predicting this, okay, if MMT is enacted, I am predicting inflation unlike the world has seen since perhaps the Weimar Republic. No, since the 70s great inflation in the US. But look at the blue line there, that's the stock market. And that is, financial assets can rise during a period of inflation. The problem is, though, when you adjust your gains for inflation, all those gains are wiped out. Nominal gains are extraordinary, but real gains are minuscule. In the 70s, for instance, if you had $10,000 invested in the S&P in 1966, by 1981, that was worth $27.50. So under $3,000, inflation adjusted. So there you go. That's it. So I've gone through the policies of the Republicans, which are largely status quo. If anything, they're going to try to cut tax rates more on personal income. My worry is that they're not stopping spending, and that is a major issue. I do not hear Donald Trump or any Republican talking austerity, not one of them. And that's a real problem. Okay. And it means the Fed will monetize that debt. Okay. They're going to print money to pay that debt. And that means that's potentially inflationary, as you know, and it's terrible. If the Democrats win and they embark on this highly regulatory effort where they regulate companies and labor and they promote labor unions, and they retool our economy magically into a zero carbon emission economy. They all that stuff is going to lead to wild inflation when coupled with MMT, because inflation, as Milton Friedman famously said, is too much money chasing too few goods. We know where the too much money is going to come from. Where do you get too few goods? Well, you get it from regulations, restrictions, requirements, tax rates, and so forth. So I would like to take a lesson, not lessons. I would take a lesson if you had one, but I'll take questions. So please feel free to ask a question while I try to figure out how to find your question. Give me 2 seconds, please. Oh, yeah, here, yeah. Give me 2 seconds. I think I'll get there now. All right, question. Oh, it wasn't a question, it was a comment. ISM stands for Institute of Supply Management that I was struggling with earlier. All right, you don't have any questions for me? That's it, a comment from my good buddy who's smarter than I am. All right. That's it, gang. I'm going to wrap this up. You've been a good audience, I guess. I hope you're awake. No questions. That's a first. I usually have great questions. What is wrong with you people? Can you not figure it out? Or did I cover everything and you're devastated and you can't even respond? You're so stunned. All right, gang. That's our webinar today on I got one. Gold and silver. Okay, yes. Oh, questions. Don't leave me. Gold and silver, of course, I'm very bullish on gold and silver. Today, in fact, a guy named Stanley Druckenmiller appeared at a famous hedge fund conference in New York called the Robinhood Conference, made a strong pitch for gold and silver, which is absolutely, I highly advocate exposure to gold and silver right now, and it doesn't matter who wins the election. But if the Democrats win, I will up my allocation from a recommendation of 5 to 10% to 10 to 15% allocation to gold and silver, if not more. It absolutely is the only way to hide assets in a hyperinflation period, which I would fully expect under a Biden administration if the regulatory jihad continues and if they embark on MMT. If this woman, Stephanie Kelton, goes to the Fed, we're going to hold webinars on it. And I'm going to absolutely try to help you people hide your assets. If you have something to lose, you need to be aware of the risks. And what about the step up? I don't even understand what that means, step up. I think that's a tax question. And then what about Biden doing away with the real estate? You know, their talk of the Democrat platform also includes getting rid of the 10b3-1 exchange, where if you sell a piece of real estate, you have a limited amount of time where you reinvest it in real estate and you don't have to pay a capital gains. They will get rid of that. It'll be very rough for the real estate market because that's a huge tax loophole that they uniquely benefit from. That's a very good question. Can Republicans hold the Senate if they lose the presidency? Yeah, they can. I think Arizona's tight, Michigan's tight, Ohio's tight. Pennsylvania's actually may have flipped to Trump right now because of the fracking comments, which, by the way, Biden's waffling on fracking, but I don't think he can stop fracking because fracking, by the way, remember, it happens on private land. There's very little fracking on public land except in Carlsbad, New Mexico, which is in the southeastern corner of New Mexico. But that's the only public lands where fracking's really taking place. So even if we wanted to stop fracking, I mean, it would take a grand gesture, and I just don't trust that. So, but yes, they can hold the Senate, and this is a dead heat election. But you know, I mean, it could go either way, and so I think the Senate will go the way, by the way, of the presidency. And then what about lowering the death tax exemption? This is terrible as well. I should have gone through this. As you know, if you die and you have a fairly big nest egg, up to $10 million of that is completely protected from the death tax or the estate tax. They're going to lower that to $3.5 million. So that's why people are setting up trusts to get around that confiscatory tax rate. And I say confiscatory because remember, you paid taxes on that once, at least once in the earning of that. Okay. Then if you invest it, you pay a capital gains tax. And then when you die, your ancestors pay a huge tax. It's very bad for family farmers. I mean, the farming community, they've got land, they may be poor as paupers, or they've got low margins because they're hardworking farmers, but their land's worth a fortune. The patriarch dies, and they can no longer afford to keep the farm because they got to pay this mammoth death tax. So that's great question on that. It'll be rough. And so the Democrats raising 2.7 trillion in tax receipts sounds good. How much will the Republican tax program raise? None, because they're going to cut tax rates. Now, there is a Laffer curve effect. Remember, when you cut tax rates and you flatten tax rates, initially you'll have a decline in tax revenues, but over time, as the economy responds positively and grows the pie, you should have a secondary or knock-on effect of tax rate of revenues coming from those tax cuts. It had happened under Reagan, and in fact, Bill Clinton experienced a huge influx of tax revenues from a 20-year bull market and very strong economy that was initiated by Reagan's tax cuts. That's a very good question, by the way. Thank you for that. Yeah, thank you for the step up. Is that death? No step up. Okay. Do you see Biden going 4 years? Ramifications of Harris becoming president? No, I don't see him going 4 years. I don't see it. I think he's really compromised. So it would be surprising. I think he's a bit of a puppet. I think that he'll probably. It's a long time for a man. I think he's 77. Who's already obviously experiencing the degradation of his mental acuity. It's not a slur. He's 77. My own mother's going through this, by the way. And so I know the look in the eye, and I know how it works, and I think he's doing it. I had a great question about Bitcoin. I bought Bitcoin for the first time, by the way, 2 weeks ago. Why? I'm not a gold bug. I told you that before. I'm not a gold bug, but I am into gold and silver right now because of the money printing and the situation of the debt and the deficits and the money printing. Okay. And so, yes, I'm absolutely a strong holder of gold and silver. But kids like Bitcoin. And one of my mistakes sometimes is being too old fashioned, being a value investor. So I've got allocation to Bitcoin and I like it. Boy, is it moving. Woo, moving today. I like that. I'm scared of it, of course, but I do like it. So if the Republican Senate, could they slow the Democrat agenda if Biden's elected? Absolutely, they can. They can do that. Yeah. And a lot of investors on Wall Street see that as a fairly favorable outcome. Wall Street's not known for its partisanship. They give money to both parties, and whoever's going to win gets their money because they want. The government often works on what I would call the mafia model, pay me or I'll hurt you. So they tend to give money to whoever's going to be in power to try to ensure that they get hurt the least. But yes, the answer is if we have a Republican Senate and we have a Democrat president, it will be a leavening effect, and that is favorable. Let's see, and didn't Biden renounce Bernie's MMT philosophy? I don't know that to be the case. I'm going to tell you that I will study up on that, but I don't think he's going to be able to avoid it, Rob. I think that the MMT is coming, and politicians want it. Republicans even want it. They want it, and they're going to get it. So I think, by the way, another reason that I'm worried about inflation is because, again, the politicians want it. The central bank wants inflation. They will get it. They won't stop till they get it. Remember, they recently changed their inflation target from 2% to something above that. And they recently changed their mandate to where they're no longer going to be preempting inflation with an interest rate increase. Okay, they're no longer going to do that. What Volcker did. This Fed is, as my friend Garrett Moran, who works with us, what he says, this is the anti-Volcker. This is the opposite of Volcker. And then one more. Oh, okay. So it was in the debate apparently that Biden renounced the MMT. And honestly, I don't care what he says. It's coming. This woman, Stephanie Kelton, is gaining stature as we speak. I think that she's going to make it to the Fed. I think it's just too tempting. It's just too tempting. Politicians want it, but thank you for that. I wasn't aware of that. So, all right, all the questions are in. Oh, somebody asked on a text about hide money and take it out of the country. Maybe. I've thought about that. Oh, by the way, did you realize that a record number of Americans are renouncing their citizenship this year? A record. Or maybe that's a sign of that. All right, gang, you've been a fabulously attentive audience, and I really thank you for attending my webinar. And we'll see how this election goes, and then I will have one after. I got another question. With the digitization of everything, do you think a government-issued crypto is likely under MMT? Maybe. I think governments do want to issue cryptocurrency. I think China's working on it now. And that worries me, by the way, about the private cryptocurrencies, Bitcoin and others, is because if a government comes in and they want to create their own, will it crowd it out? But the whole reason you own Bitcoin, by the way, is because it's outside of the mandate of the government. It's outside of the purview of the government. Okay, that's why you would even want a Bitcoin. So that's a very good question. Anyway, so once again, I will say goodbye now. That was my last question. Have a great week, and may the best man win in the election. And then we'll have a webinar later after that. You're the best. Bye-bye.